All right, welcome to the MyMarketer Show. My name is Danny Decker, co-founder here at MyMarketer and your host on the show today. And we have a really fun guest. I'm excited for the conversation with David C Barnett. David is the author of 10 books. He's an international speaker. He's a YouTube host on the subject of buying, selling, and growing businesses. So David, really excited to have you on the show. Thanks so much for being here. And you've had a really great, interesting career. And so why don't we just start with tell our listeners kind of about your career journey?
Yeah, sure. So I'm one of those kids who grew up with an interest in entrepreneurship and always thought that I would be a business owner. My, idol or hero on television back in the 1980s was the Alex P. Keaton character on Family Ties, who was always trying to make money and, get ahead. And so I just thought that was great. So I went to business school, and it eventually led me to a career in sales. And I got into the world of financing, brokering commercial debt for small businesses. Finally, I got into business brokerage, which is where I help people buy and sell companies. And I did have a brokerage office of my own for a few years, but eventually morphed it into a different kind of business model where today I work with people that want to buy or sell a business, but I act as a consultant. So we have a suite of different services that we provide. We don't act strictly as a business broker, meaning we don't sell on, with fees related to doing transactions. And as a result, we help a lot more people in a lot more precise and defined ways as they're going through their buy-sell journey.
That's awesome. And David, one of the reasons I'm really excited to have this conversation is our audience are primarily founders, small business owners working on growing their business, not necessarily for most of them thinking about selling today. But, I've been around the block long enough to know that, selling isn't something that happens overnight, right? And that really to be successful in selling your business, which honestly I think is pretty much all of our goal as a business owner, sooner or later, even if it's just a way to retire, right? We all eventually are probably hoping to sell a business, but I'm hoping we can have some conversation around what business owners should be thinking about, maybe in the early days or the middle stage of their business to prepare them for a successful sale down the road. So can we start the conversation there? What do most small business owners need to be thinking about that they're not thinking about?
So the very first thing you have to do is think about what a potential buyer might be looking for. And people who buy a business are typically asking two very important questions in a specific order. So the very first question is how much cash flow does this business generate? And so they want to be able to see on paper actual demonstrable profitability and money flowing from the business to your pocket today so that they can see that this thing really does make money. And the amount of cash flow that a business generates is going to determine the price someone is willing to pay. Now, that's the first question. The second question is always going to be, will this cash flow continue once I'm the owner? And that's an entirely different question because now you start to get into questions of, am I going to be able to run this business? Are the customers going to want to continue to do business with me when the previous owner has gone? Are the employees who are valuable and knowledgeable going to want to stick around when I become the owner? And so that's when someone starts to get into concepts of transferability. So they're looking for those SOPs, checklists. They want to see some kind of documented system of how this business is actually run. They want to know, will the marketplace, the employees, et cetera, accept me as the replacement for the person who is leaving? So if you start to think about it in that respect, you realize that there's a spectrum of businesses out there. So there could be a corner store, gas station, Subway, restaurant, et cetera, that you go to frequently right now as a customer. You probably have no idea who the owner is, right? The owner of that business could change tomorrow. You won't know. As long as the prices and the selection and the location stays the same, you're probably going to still go there. So that's an example of really highly transferable business. And we find those often in the world of where businesses are sometimes franchised, for example, is a great indicator that it's highly transferable. At the other end of the spectrum, would be some kind of like professional service, like your own business, right? So people are going to come because they met Danny, they saw you speak at a conference, they trust that you know how to implement a strategy for their business. They start to do business with you, they like you. They're doing business with Danny more so maybe than they're doing business with the brand or the company. And so if I was going to be buying your business, my concern would be, are people going to like me the way that they like Danny? Now, for those ultimately difficult to transfer businesses, what that really means is that an exit or succession could be a much more involved kind of process than simply selling the business. Like if I was going to buy your business, I might say, hey, Danny, I'm going to do this deal with you, but you have to stick around with me for 18 months while I get to know the customers and we have an opportunity for that positive feeling expression in the marketplace to transfer from you to me so that people can really understand that I am as capable as you, I'm as good as you are in delivering the services, and that the customers who trust you understand that you trust me. And so those are far more complex successions. Sometimes business owners don't like to hear about that because what they want to do is they want to think that their business is something that can be sold like they might sell a house or a car. And it really is not like that at all. Obviously, the more effort you put into preparing this throughout your career of ownership, the easier it's going to be. You know, if you grow your business to the point where you're not dealing with any customers at all, it's always frontline employees, then it makes it more transferable, like that, corner store or gas station that I mentioned in the beginning.
Yeah. No, that's such a good conversation, David. And honestly, it kind of leads to the next question I had for you. But I'll set up with a little personal context. I've been in the marketing space for 15, 16 years, have built an agency, have done the solo coaching, consulting, speaking thing. And and this business, MyMarketer, our sort of core services that we place virtual marketing assistants with businesses here in the US. And, so I am very much, we're very fortunate to have a great team that has allowed me and my co-founder to operate really far out of the weeds, right? We honestly, we love our clients, but we have very little personal contact with them because we've got an amazing team. But, so I am sitting here kind of mulling that exact question you just raised, which is like, on one hand, we want to grow the MyMarketer brand because we are building something that is bigger than us, that we want to have staying power long beyond our involvement. But at the same time, and I think this is something a lot of small business owners can relate to, as a founder, as an owner, like our personal brand does have value, and the whole the whole thing of people prefer to do business with people they know, like, and trust. So what I'm getting to is sort of what I view as honestly kind of like an existential question, which is how should a business owner balance that personal brand, right? And in my view, it's tough to make the argument that you shouldn't leverage your personal brand at all, just because there's so much value that you bring as an owner, but very much with the mindset of like, ultimately, I want to build something that's bigger than me, not just so I can sell it, by the way, but also so that every time a new customer signs up for our service, like they're not disappointed that they don't get to talk to me, right? I don't want to build the brand all around me because then I have to be there every single day and answer every single question. So how do you balance that in your mind?
Well, here's the way I think about it. Let me tell you some stats that might be a little frightening, though, first. So there is no hard and fast statistics on how many businesses actually get sold because of the way that governments record this information, okay? And the way that businesses get sold, there's two fashions. There's an asset sale and a share sale. So all that is to say is we don't know for sure, but the best we can tell anecdotally is only about 1 in 5 businesses that exist ever make it into somebody else's hands, whether that's becoming part of a bigger company or a parent handing down the business to a child, for example, or an outright sale to a stranger. We also know from statistics from the big online business for sale websites that of all the businesses that get listed on those websites, only about 1 out of 5 are sold as well. So what I'm trying to get at is it's actually quite difficult to sell a small business. And, you don't ultimately control what is going to happen when you reach the point where you decide you want to sell. And the truth is that because of the risky nature of small businesses, they tend to sell for relatively low multiples of cash flow. So if you do stock market investing, you'll hear that SpaceX just went public for 100 times earnings or cash flow or whatever. In the world of small businesses, we're typically talking about 2 to 3 times cash flow. So very low numbers because of the risk of these small businesses. So all that is to say, it is not generally appealing for a business owner to sell their business. It usually makes more sense to try to own and operate a profitable business as long as you can. And it's only when a pressing personal concern appears in the owner's life that people actually think about selling. And these tend to be burnout, boredom, and fatigue, divorce, poor health, the need to relocate, and retirement. So once you decide I want to sell, then that changes the story. But before you reach that point, putting everything you've got into making the business as saleable as possible may not be the right strategy. It might make far more sense to lean into every lever that you've got to make as much money as you can right now. And if that means exploiting the personal brand and trying to create your own sort of celebrity to help you, open the doors to other opportunities, and it's going to generate more money today, hey, if you can earn an extra 50 grand in your business over the next 10 years, that extra 50 grand could represent more money that is a sure thing than what your business might sell for when you decide to exit. So I always say to people, make the decision that's going to put more money in your pocket today, because number one, once you've got the money, you can do something with it. You can invest it in some other way, build your personal wealth, because you don't know for sure if that buyer is ever really going to appear or if you're going to be able to do a successful transaction at all. That is something that really needs to be left for later on. And I say to people will make decisions in their business under the assumption they can sell it whenever they want. And they miss this difficulty in finding a buyer, but they also miss out because they misvalue their own business. So one of the things that I do with clients is I'll do an evaluation of their business to show them what it would sell for today. And people are often shocked. They're often surprised. They think it's worth more than it really is. And with that information, they can make better decisions as they get into that last decade of ownership. I've actually had people who've done things like invest $500,000 in a piece of equipment, and then later they decide to sell, and I'll show them their business isn't even worth that amount of money. And they'll say, but wait a minute, I put all this money into the equipment. I'm like, yeah, you never should have done that. Mm. And they made the decision based on a whole bunch of assumptions, largely in part that they thought they were enhancing the value of the business when it just wasn't true. So this is one of the reasons why I caution people, and I say, get some expert advice as to what your business is really worth. This will help inform the decisions you make along the way. And a bird in the hand is worth two in the bush. Like if you can do something today while you are the owner of the business to increase its profitability, it very rarely makes sense to not do that. Don't put this salability idea ahead of everything else. People are overly influenced, Danny, by media. And what does the media cover? It covers, guys like Elon Musk and Mark Zuckerberg and these amazing stories that are really 1 in a million stories. The media doesn't cover the person that worked in a business that they built up over 35 years and then sold it to one of their employees who didn't have the money, so they had to finance it themselves and collected payments over the next 5 years. But that's what a ton of these deals actually looks like. And people aren't ready for that because they're not exposed to that in the world of the online media and the unicorns and the out of the park success stories.
I think that's really, really great advice, and I think it's a really good reality check for especially founders kind of in the early stages of growing their business. I haven't heard it put quite that way, and I think that's great. I think one of the things that it makes me think about is, I think in the vast majority of cases for small businesses early on, the founder, the co-founders, the owners, that personal brand is really, really helpful in making that sort of initial round of sales and starting to grow the business. And so I think we're in complete agreement there that you pretty much have to lean into that. But what I also see is that over time, as you are successful, as your business does begin to grow, you then have more resources, financial resources, you're starting to build a team. and you can start building, call it the company brand, right? And I think that there can be a place for a visible founder alongside a company brand. And I think that over time you can transition, right? It doesn't happen overnight, but again, in the early stages of my first business, myself and my business partner were out doing the networking, shaking the hands, getting on the podcast. And now in both of the businesses that we own and operate, we've got marketing teams, and we do make investments in the company brand beyond ourselves. And I really think there's a place to do both. And so, but to your point, I also think I like how you said it. It would be kind of silly not to leverage all the resources you have available to make your business more profitable. So I guess my message for small business owners listening to this is like, absolutely lean into your personal brand, absolutely grow your personal brand. Just understand that if your end goal is to sell your business, which you made a great point, David, that doesn't have to be, you're going to want to start investing into the company brand as well. And I do want to make one more point sort of along those lines. I think I shared this earlier too. I generally believe that, a company that's built to sell is also more fun to operate. And I kind of made the point earlier that one of the problems and one of the reasons both myself and my co-founder, as we're building MyMarketer, are being very careful not to make it all about us is because, frankly, we want to have the freedom to spend time outside of the business and to not be the person that needs to answer every client concern and things like that. So so there's that side of it too, which I think
what you're doing with those efforts is you're increasing that transferability that we talked about earlier.
Yeah.
Because people are going to be able to see, hey, I would be able to more easily take over and carry on this cash flow even if Danny is gone, right? When it comes to marketing and branding, one of the things that I bump into a lot with small business owners is that they'll invest maybe in having some great graphical elements created, or imagery. Maybe it's audible stuff if they do a lot of radio or video advertising or something like that. Have a jingle made, for example, and they'll think that by virtue of the investment in the marketing that they have somehow enhanced or increased the value of their business. And one of the things I'd like to caution people about when they're thinking along those lines is that the value of a business is always measured indirectly through the value of the cash flow. And the example that I like to point out would be Coca-Cola. So if you go into any grocery store anywhere in the world, you're going to find Coca-Cola branded products, and you're going to also find maybe store brand, right? And what these two things are is fizzy soda water. That's what they are, right? But there are the Coca-Cola branded product might be double the price of the store brand. And there are people who walk into that store and they will pick up that Coca-Cola product and they believe that it holds more value and they're willing to pay more for it. And so what is this the result of? Well, it's over a century of branding and marketing and advertising, right? And so they've paid a lot of money over a long time to get a place in some people's minds that puts them over and above. But the fact that they're able to sell their product for more means that they're able to earn greater profits, which means that investors are able to value their business at a higher price. And so when people are doing these branding exercises, I would say to you, think about that. You want to have a brand that is going to allow you to earn more money. And so this is when I kind of cringe a little bit when I hear people sort of putting a lot of intensity or investment into a brand that includes words like budget or discount or low price or whatever, because you're really putting an effort into building a brand which is going to encourage people that are maybe not the right kind of customer, who are going to be looking for the lowest possible price. And with that kind of arrangement, it's going to be really difficult for you to have superior margins, which are going to allow you to become more profitable. And so the investment could in fact be a lot of money with service providers like yourself, but then it's also the time element, right? You've got to have enough time for the market to absorb that brand message. You've got to continuously reinvest in that advertising effort, and you have to build a space in people's minds where you're the one they think about when they think about a certain product or service, and they think about it in terms of, if I want this done correctly, or if I want a quality product, or if I want it done right, or the right advice, etc., these are the people I call, rather than one of many. right? And so I will often use the example of toilet paper. There are probably less or fewer brand loyal toilet paper shoppers maybe than there are soda shoppers, for example, right?
Yeah, no, that makes so much sense. I think it's great. So, one of the things I was excited to ask you about here, David, is when you're working with buyers, right, and looking at evaluating a business, valuing a business from a marketing perspective, like what are some of the like the quick things you look at? Or maybe a better way to ask the question is, what are some of the things that buyers value? And I'm thinking real specific. Like, for example, do buyers care about a well-maintained CRM? Do they care about a large email list? Do they look at things like how engaged is that email list? Like, what are some of those things on a more micro level in the marketing world that buyers really care about?
Yeah. So buyers are looking for opportunities, right? Because people want to buy a business and they want to be able to make money with it, and they want to be able to see that they're going to be able to grow that cash flow over time with them as the helmsman of the operation. And so what I actually coach business buyers to do is to look for profitable businesses that can be bought for a reasonable price that have problems that the buyer knows how to solve. So what might that mean? Well, if you discover that the business has 5,000 people on an email list, but they only send out emails seasonally, right? Then it's like, well, wait a minute. We could probably increase the frequency of the emails and generate some more sales. So somebody's looking for that as an opportunity. It's not necessarily going to enhance the value that the seller will receive, because again, the price that someone's willing to pay for a business is tied entirely to the cash flow. So a seller who has that great email list, who's underutilizing it, should actually just make better use out of it to improve their sales, improve their profitability. That will increase the price that they're going to be able to get. Leaving things for other people to squeeze, to enhance the business is not the best strategy for a seller. Looking for those opportunities is a strategy for a buyer. So I would say, again, like I mentioned earlier, anything you can do in your business to enhance revenue, profitable revenue, you want to make money off each sale, but you want to grow the business and grow it profitably so that you make more money. And that probably means taking advantage of the sort of marketing tactics that you're mentioning, making sure that you're pulling all the levers.
Yeah, that makes a lot of sense. Do buyers typically, are they going to get as granular as looking at, your list size, your open rate, your CRM setup, that type of thing, or does it really not get to that level of micro like assessment?
Well, what you're asking is a question that varies by industry. Because one of the things I teach people who are buying a business to do is to buy a business in an industry they know something about, right? And so in some industries, these things are going to be more prevalent or important than in others, right? So it really depends on what they're trying to do in that specific industry that they're going to get into, and what they're going to be looking for is going to be based on that. In some industries, location is like the number one thing. And so that buyer is going to be more focused upon, can I buy the real estate, or can I sign like a 20-year lease with the landlord? Like, am I going to be able to secure this property for a long time? If it is a location-independent business that serves people at their homes, then the question is going to be, what value are past clients going to be for me? If I am selling something that only gets sold once every 15 years, like replacing roof shingles, for example, then what's going to be valuable to me maybe is a 30-year-old business that has records I can go through and start marketing to people who we helped 12 to 15 years ago, right? That's not going to be as important if the business is only 10 years old, right? Well, I guess it might be important 5 years from now. So it really depends on the industry and the type of business, but the people who are looking at making an acquisition, if they're working with me anyway, they are trying to learn as much as they can about how to be successful in that industry. That's going to inform the way they look at one of these businesses and the kind of assets they're looking out for.
Yeah, that makes a lot of sense, David. Okay, so for business owners listening to this show, maybe thinking about selling, maybe in the near future, more likely down the road, when is the right time to have a conversation with you? What does that look like? And how does somebody go about doing that?
So you have to decide which kind of business owner you want to be with respect to selling. You can either be the kind of business owner that has a plan, which means you should try to talk to me 10 years, 5 years, and 3 years before you want to sell, because those 5 things I mentioned that motivate people to sell, 4 of them are involuntary. They happen at the drop of a hat because of something personal in your life. And your plan could go off the rails at any moment, and you suddenly become a seller when you didn't really know that you wanted to be. Or you can choose to be one of the business owners that has a succession plan which just says, I'm going to live forever. Those are the people who never make any plans, and they just run their business, and one day something critical happens, and they either have to find a buyer within 90 to 180 days, or they end up closing. And those 2 camps are the 2 camps I've seen. It's people who completely do not think about the future at all, or those who prepare. So if you want to be prepared about the future, and you can see the exit at some point down the road, then you should reach out to me. If you're just interested in this stuff, subscribe to my podcast. I mean, I put out 2 episodes every week, and this is all the stuff I talk about all the time. And you can become more informed about what this process is going to look like as you move forward.
And so we can link them in the show notes. What is the URL, and tell us about the podcast?
Yeah, sure. So smallbusinessanddealmakingpodcast.com will take you right to my YouTube channel. And the audio of my YouTube feed just goes to all the audio podcast applications out there. So if you just look up David Barnett Small Business on anything, you'll find me right away. davidcbarnett.com is my blog site, so everything gets posted there as well. And basically, I've got books that I've written. I have a few online programs, and we have consulting services. Whether you want to buy or sell, we can help you along the way.
That's fantastic. David, I've really appreciated the experience, the expertise you brought to this conversation. I definitely learned a few things. I think our audience did too. It was great. So I'm going to leave you with the sort of a variation of the last question that I ask everybody, which is, what's one thing, if you could just kind of push a button and transmit this information to every single business owner, what's the one thing you wish that every business owner understood about selling their business?
Yeah, sure. So the business is not ready to sell when you want to sell it. The business can be sold when the business is ready to be sold. So it's not about you. It's about the business.
Fantastic. David, thanks for joining us.
Thanks, man. This has been great.
Thanks for listening to the MyMarketer Show. Hope this episode was helpful. Stay tuned for more great content in the future. Please be sure to like and subscribe. And as always, if you would like to add a world-class virtual marketing assistant to your team, you can get started at mymarketer.com. Mention the MyMarketer Show, and we will waive the startup fee. Thanks for listening, and we will see you next time.